Great and beautiful morning, afternoon, and evening to you all, wherever you are joining me at this moment. Welcome to 235 edition of Investdata Trading Academy live with Ambrose. Yes, the market is becoming more interesting across the globe for what is happening today. I think that things are really changing on daily basis. I can see the power of what of economic data, investors sentiment, and also news that emanate from either from the regulators or from the company or information going around in any domain. That is why you as an investor or trader, I said you don't trade the news, you trade what the chart. You look at the chart to see what is happening because this news that is coming around the globe, whether left and right, wherever it's coming around, is going to reflect on what on the chart, and this chart will tell you the attitude and the behavior and the sentiment of the people in that market. Whether you are trading cryptocurrency, you are trading FS, you are trading future stocks, you are trading bond. You can see change in all this either coming as a result of whether policy change, coming as a result of company corporate action, coming as a result of what information as we have seen what happened in Silicon Valley Bank, can see what also happened in Credit Suisse. All this when it comes market reaction. But you as an investor or trader, that volatility in any market creates opportunity for you to buy high and to buy low and sell high. If that is the mantras, or if that is strategy that means at any given time in any market, in any instrument you are trading, any assets you are trading, you need to look towards what to see what is the volatility rate in the market and what are the factors driving this volatility. Are there things that will come to stay or things that are just temporary? You need to understand all this so that at the end of the day, you will be in a better position to move on to make informed decisions. And that is why when I emphasize that it's good for us to always look at our chart and also be on the market to see what is happening. You can understand. Yesterday, when we are looking at this market at this hour, we saw that there was still mixed trend. But at the time we were closing the class, we didn't know that another information has also come out from as regard the Swiss situation. But in this class, I have told you about the Swiss situation about even at the beginning of the month when I told you that the cash flow of that bank as at 2019 and 2020 that the cash flow have not been was so trade. If you remember, and you can see that as an investor, you need to look at all this and start taking a position, from action before it comes to. Once you look at company earnings as they are coming, look at what is going to drive. Finally, when the financial situation started taking and the major shareholder is in a Swiss Credit Suisse, delay in terms of intervention. See that market reacted that even lost up to like 20%. But good news that as to speak now, because of the speed intervention, I see that there's recovering already in that dimension. It tells you that you as an investor, you must look at what is the chart saying and where is it going. Once you're able to capture that as an investor, no matter any assets you are treating, like I said earlier, you are good to go. That's why knowledge is power. Like I said, that it is your knowledge and your consistency in acquiring knowledge that will also boost your confidence and also your bottom line. Once you're able to marry these two together, when you have confidence and you are trading with confidence and with knowledge, your bottom line are about to go up despite what is happening. That's why I said, no matter who you are on this journey of wealth creation, knowledge is the first thing that you continue to acquire knowledge on daily basis because events will fold and things will be changing. Once you acquire knowledge, it helps you all over to stay ahead of events. And don't forget also that I will tell you that don't ever fall in love with up market or even a down market. Why? Because once you see an up market, because you have your strategy you are trading, once you meet your target, you are about to take your profit. Don't without waiting up to still go up. No. Also, when you have the strategy of your exit, once your price come down to the level that you want to enter, you jump in with confidence. When also your stop loss is already activated, once you exit to look for another opportunity to be in that market. For me, this is the trend that the market is we are seeing the market now. That means there's no cause for alarm for any of us in this market, despite we are seeing this contagious fear that have moved across the globe. We saw what happened yesterday that how the backing stocks of many climate were in the red. This morning we can see that down here in our market we are seeing that our market is still also reacting to this contagious fear or what we call for overall effect of what happened in US and also Europe, EU, because of what? Because of this credit suite incident and that of it. But I will tell you categorically that let's make it clear that what happened in US and Europe is not a sign of a disaster or financial breakdown that we saw in 2008. There was a financial meltdown. No, but these are different situations separately, and I think that efforts have been made at different levels so that all these are corrected. For me, there's no cause for panic selling, especially those in our market here. I can see that no question that were asked yesterday night, no after market close, even this morning, shows that many of us are panicking already. I don't expect people that are in this class or that are in the buy and sell signal, the premium class to be panicking at all, because we are doing things we are in our own way with knowledge. We are not panicking, we are following the trend, looking at the sentiment, looking at the fundamentals, and also looking at what is the perception of people in the market. For me, what we are seeing now, even at the market, you see, looking in the southward, is a part of correction move that we expect. And don't forget, I said when markets are trending, trying to consolidate, it's either a breakout up or down. This is what we are seeing in both our market and other markets. But for those in the matured market, for me, there's no cause for alarm at all, because our market is not. We know that here we can't separate our market from there. We are not immune. But I'll tell you, if the market can kind of absorb the uncertainty that associated with election in this domain, and able to have a market rally. This time that we are seeing profit taking, at the same time with this fear coming now, coming together like a coincidence, profit taking and the fear of what is happening globally, putting pressure on the financial sector. And don't forget that the financial sector have not released their audited account. All we have seen there before is what unaudited. For me, there's no cause for alarm. Like I was saying that this contagious fear that we're seeing, it's like a economic crisis that flow from one market sector or or industry or region to another, because of what, whether international or local, because of what, because of interconnection between all these market and all these sectors and industry. For that, when it comes, you as an investor, you need to manage it well and see how you can take advantage of what this because there's always a buffer for it, because when the economy also turn from that economic shock or reality, see that people that understand will benefit from it. But that's why the mechanism of all this flow is what you need to know. That's why you keep your eyes on what, on your money flow, and also your sentiment report of the people of the market, to see exactly where are they heading to. Because I've said earlier that what we're seeing in the last let's say from Monday to date, as a result of what this contagious fear that have dominated the market space. But I've seen that gradually it's going to fade out, as now we're seeing attention being moved toward to economic data, and economic data, and also coming policy meetings of different central banks of the world. These are where I is moving now. We are seeing what will be the next action of all these central banks, especially starting from Fed. Fed have seen, yes, you can't totally rule it out that the impact of aggressive interest rate is part of what is also happening in the banks, but especially this this SVB bank, and also the credit Swiss of Switzerland National Bank. Although all these are what we should also look at, and I believe that this will send a signal for them, especially in US and and EU, because these are the major climate where they follow nearly all the moves of Fed. Fed on that have already, like yesterday, that's already kind of kind of proposed or plan to hike rate with 50 basic points. Also in the EU too, which their own monetary policy meeting is going on today, also proposed to hike rate on that 50 basic point. But with what happened with the Switzerland credit credit Swiss now, and also the major shareholder, which is the Swiss National Bank, has intervened with almost 50 billion. For me, let's see what if also the EU EU Central Bank will continue to work to hike it. What is happening in Russia and Ukraine is not a matter. We are seeing that this is also involving a lot of international a body, a different country coming in, also preparing for war. I see that that's also another thing we should also consider. For me, I believe that we should look more of what's going to turn the trend, and also if we continue to high rate with the tension coming, but if what happened between Russia and the US in terms of dropping their drone, If that happen, I tell you that the green D before, that I've been saying, it might have to be threatened at this time. If that is that happen, going to affect prices of what, prices of commodity gain. That means we are going to see another run of inflation going to the future. These are the things that you as a trader investor, you don't go and relax. You look at to see what is happening around the world and how it's going to influence your own market or the domain where you play is very, very key. And that's why I believe that gradually, and then they start slowing down with rate. Yes, since we are seeing a little, pullback in inflation in this mature economy, I believe that that will happen in that domain. But to speak now, don't forget that before now, oil yesterday, oil had hit about almost a 15 months low, but we saw a little rebound. I tell you, if oil continue to go down, that's another thing also that will help us in terms of controlling inflation, because cost of energy everywhere, eating up the environment or business, impact. If oil continue to go down, but if what is happening in US, Russia and Ukraine also is not slowing down, you can see that there will be a lot of things that will shape the market in this 2023. That is why you need to keep your eyes on the market, because where your money is, that is where your eyes should be. Because if you want to put where your food is, if you where your mouth is, that is where your food is. You need to have to balance all this. For me, there's no cause for alarm. As we speak now, oil is doing at 74 $74.85 as we speak, coming out from the 15 months low. For me, it's a good one for oil price. But let's see if oil can remain below 80, like I already say, that will help also to manage the inflation. That's for the international market as we speak. Now, Russia, as we speak now, U.S. market is mixed. You can see that Nasdaq is in green. Nasdaq is in green. While S&P and the Dow is slightly in red. But if you look at what is happening in in Europe, I will tell you that Euro market as we speak is very, very strong. All this market there are looking up, especially when the life of the Credit Suisse swear on what, on the Swiss National Bank and helpline or intervention. That boosted that, because that stock have lost almost a bit better. Also this morning regained all it have lost at yesterday. This is changing the trend in that domain. And as we speak now, this also have helped to strengthen the investor sentiment in that market, as liquidity position of the bank also seems to be what back ahead of what, as I told you earlier, that today is the European Central Bank policy meeting to see if they will go ahead with a 50 basis point or what, or 25, as I've said earlier, because of what is happening around the globe, and also as the inflation data is also looking down, if they will continue to hike their rate or what, to look down. This will play out because bank shares that have suffered a pullback, kind of sell off as of fear on Wednesday. We are seeing them this morning trying to rebound. Why down here, our own market, we are seeing that the banking stock are even driving ahead of MPC meeting that is coming on Monday and Tuesday, and also the election. But I believe that all this will just happen immediately the election season comes out. I'm talking about Nigeria, comes and go by Saturday. All eyes will be on what will the incoming government coming to do, and also the outcome of MPC meeting. Also, don't forget that yesterday we saw a missed rate hike. We saw that in missed rate option that we saw on the Treasury bill. We saw that the 182 days and the 364 saw a decline in their rate from 10% to 9.49. Another one from 6% to 5%. Why the 90 days, which is shortest tenor, we saw a move from 1.44 to what, to 2.4. These are the rates, but I believe that in all these markets still have a potential to return what more than what we are seeing if you invest with knowledge and also invest with what, with calculated move, combining your technical fundamental and sentiment. That is how to go in that in our market here. For me, there's no cause for alarm. Then, as I said, the Europe market is very, very up now, looking good, open on a better note. Like I said, because after the end of their meeting today, we'll see how far it will go. I told you how you have rebound from 15 months low, and also we want to look at what is happening in Asia. Asia, particularly that nearly all the index in Asia market are in red, despite the recovery we're seeing in EU because of intervention. The fear of this bank's failure or bank financial stability have sent a lot of fear to that market. We saw sell off of banking stock and nearly across all the indices, all the market there in that Asia market. That keep that market now red as we speak now. But we're seeing that the red is already reducing at this hour. When it opened earlier before now, we saw that all are in red. But at the news of Swiss National Bank intervening in the intervention in credit Swiss bank that also trying to move up. I'll tell you, going before the end of the week after the meeting of ECB today, all eyes will be on coming one that will hold on Tuesday and Wednesday for Fed. Already our own is holding in Nigeria, monetary policy is holding on Monday and Tuesday. You can see that an outcome of all this meeting will always shape the market, where the market is going. That's why we don't need to panic at all, as I said earlier. But if African market is still equally means, we saw what happened yesterday. We saw that in Ghana, the inflation also slowed down yesterday. Also, we saw that Ghana is already moving for and then moving forward intervention. The World Bank intervene to know to. It's a good one, but we're seeing that also Ghana has successfully removed their fuel subsidy. You can see that means we should also be going up to see that incoming government also remove our own subsidy. But I believe that as we speak now, if we come back home, the market here is in red as we speak. And just yesterday we saw the inflation figure for the month of February. That means the consumer price index. We saw a kind of a slight inch in the up direction, the northward direction. But all our investigation, our focus or projection was we want to see inflation pulling back. But we saw that it was marginal up, it was 0.09 points, based out to around the 21.91 point, on year. But also on month to month, we think that yes, we have not seen a total decline, but almost flat, which is also good. But let's see if this data that was seen so far, the one that managed from the inflation, and also we have seen a slowdown in the last quarter GDP, not Q1 in the last quarter 2022. We see, and also because of also the data we have seen on purchasing manager for the month of February, which has already shown a contraction from 53.5 in January to 44.7. That is a pure contraction. For me, it's already below 50. That's that the activities have slowed down. And this month of March, we have seen this already more than half of March. Yes, the cash crunch is still lingering, even when the CBN have given a mandate for us to have given a kind of circular for the bank, sorry, not mandate, circular to release this 1,000 naira, 500 as the Supreme Court have ruled. See what the money is still coming out in Troku, but I believe that before the end of the month or early April, we have stability, really as the election come on Saturday, another election season has come and go. But let's keep our finger crossed. But for those that are in class that are preparing for how to take advantage of activities we expect to happen in the Q2 2020, Q2 and beyond 2023, I think you start preparing, because the coming master class we're going to look at all the factors. We are looking at all the data that are coming both locally and international, how it's going to play out in the next quarter and and beyond. Which you can take advantage, which industry, which sector, which companies are taking opportunity for traders. I tell you, for traders, the market is for us at any time, but we don't invest, put our money down. We see opportunity, we take the opportunity and cash for that. For investors, I told you earlier that this market is for you for what this what earning season and the income season for income investors. For traders, and for capital appreciation, at this point we are seeing markets going down. It become attractive for us. We want to look at where is the best time for you to jump in. But all this will be discussed in the coming class, and how you can take advantage of expected policy shift we are expecting, and all this both locally as things that events are changing, how the incoming government is going to also put things together to make sure that this economy is revived. And I tell you that we can't separate the economy from the market, and also we are seeing that the market is giving us a signal where the economy is going already. I tell you that market is a leading indicator. Now you know that election is coming an end with this one that coming on Saturday. Once it's finished, real business will be focused despite the investigation and all those. Yes, they have the way of shaking the confidence, but once there is no vacuum, no in hand over government to government, I believe that also will give confidence. We'll start seeing direction. People are not start planning, because a lot of business or individuals or companies are still waiting to see the end of election in Nigeria 2023 before they can start thinking or pointing way to come this way. That means once people to get the election right, and the governors of different states are choosing, that also will boost the confidence in the economy and the market as general. For me, there's no cause for alarm. Let us keep our finger crossed and invest wisely. It's not the time to follow bandwagon. Let your investment objective and also trade your plan. If you have a plan, and any of us in this class, I believe that none of us is doing well. Guess what? We all have plans to trade and don't know how to pick our stocks. And for those in the premium class, I know that you don't have issue, because we always tell you what to do part time, and also where to hold or not to buy, or what to stay away the market. I tell you earlier that our position was watching our position. There's no say contrary move for us to say you should jump up. The correction we are seeing in banking stock is not enough for us to say you should sell your stock because we see that it's just a contagious fear that was because a pullback of this one can if you have fun for you to buy this stock that has good fundamental so you can average that when results come start going up, then we are good to go. For me, there is no cause for alarm or for us to shake or to do panic selling when others are panic selling. Don't panic unless you have seen that what attracted you into that position are not there again. That is why you cannot sell off. Like I said earlier, I've seen no good opportunity for us to for we traders to take advantage of the market after this season because once election come and go, then any season will end in October. In 31st of March for December year end for their audited account. Then we're expecting to start in Q1 in April and May, and that also shape us how give us an insight, shape our decision. That's why the class comment for us to ready to prepare ourselves for the world expected results in Q1. That's why I tell you that Q1 results going to be missed, but there are some industries or sectors that are going to have to supply the market. How can you take advantage of that in order to support the market and position before those numbers in the market? And also looking forward to see the bigger world change in government. But I tell you, government come with policies that can change every sector, that can impact the sector positively or negatively. That's why, as we are positioning our eyes, is also the what happened, in election year, even when there's change of government, the handover, continuity, all of them will be discussed in this class, on Saturday, the 1st of April. And I will kind of implore you take advantage of the discount now between now and the 25th of April so that you can, after that, you pay the full cost for the training. And I know that at the end of the day, every participant will have cause to smile and because we believe that what we're going to share is going to also impact your portfolio positively at the end of the day. Yes, if you look at what the market is doing right away now as we speak, I'll tell you that the market is already, I told you that our market is in red at this hour. Market has pulled back. We saw it yesterday when the market break down the T line, and you know what the T line means. But when the market break down the T line yesterday, today you are still extending toward that southward direction. And don't forget the next like that once you are seeing that the index action or price action is going far from the T line, so that the sign of rebound is also closer in that direction. As we speak now, the market is trading at 55,301.82. Market is now about 188.38, down by 0.32 down as we speak now. The market is down by what? By 0.32%. And also on a negative market bread, we're having 13 losers against 7 gainers as we speak. And if you look at the gainers chart, let's start with that today. Look at the gainers chart, I'll tell you that it's being led by or topped by Chance. Chance is leading that direction, followed by University Press. You can see also Owando coming back after recording a huge loss yesterday. Also see that the Living Trust Mortgage is there, and Honeywell is among the gainers as we speak. Why for that? Because I said there are 7. This is the top 5 for the gainers chart. On loser chart, we're having 13 losers as we speak. We're having each year leading that back. The banking stock. Also, we're seeing another financial stock, Royal Exchange. We've seen RO2 Briscoe. We've seen also GT Code losing there this morning to trade below 24 naira, and also we've seen Access Corp also trading below 9 naira as we speak. These are the position on the market as well. Then you look at the volume, in terms of volume traded so far. We are seeing that UBA is leading and UBA is selling around trading at 8 naira flat, which is 6.3 million share traded so far, followed by Zenith trading below 23 naira 70 kobo, 5.3 million share traded so far. And we are seeing that also LBN holding has come below 11 naira, trading at 10 naira 70 kobo, trading at 4.4 million shares so far. And Access Corp is trading at 8 naira 80 kobo, 3 naira 3.7 million share traded so far. Then the last one on the top test of volume traded so far is Sterling Bank. Sterling Bank maintained a price of 1 naira 51 kobo. Good one, trading around what 3.3 million share at this moment. For me, this is state of the market in terms of performance. Then we want to look at what is the chart telling us as we speak. Quick one, we want to look at all our indicators to see what the market is doing, because we are already preparing what we can take advantage of this market that we are seeing this movement forward against Q2. Like I said earlier this last yesterday, that the period, every investor across the globe position is from Q2. What they are seeing Q1 position taking is for what for the year will start coming back after the earnings season. Like in the mature market, we are seeing also missed earnings. Most of the earnings in mature market that came from the food and beverage industry were not. They are, most of them are missed. But those results that came from their building materials, their construction sector in that mature market are good. And for that, we believe that we are going to see similar results. Yes, we have seen some food related companies here. Their numbers are missed. Some are positive and they are paid dividend. Others are looking forward to see, and that's the one. Also, you can see it in the number released from the industrial goods down here. We saw their numbers that came from Dangote cement, that came from what's it called, Gua cement and Waco. Well, they're not bad. Yes, the dividend were also not too bad. We can say that that's why this trend globally is not we are not depending from them. That means you as an investor should know what to do at this point for you to know exactly where you are standing. Yes, you can see the T line already here, the blue line. Let me call other indicators so that we can quickly look at what is happening. The momentum in the market now is this still very strong. That's why we're going to look at our ADS. It's very, very important at this point that we look at ADS and also look at our money flow to conclude what is happening so that you know exactly what to do at this point. Look at our money flow. These are the indicators for this morning. Yes, you can quickly say that no, I did this in yesterday by drawing a line from here to say that the market, consider the can see that the market now, this is a trend line upward. Can see that it's now crossing the trend line now. Looking down, can see that that's a sign of what already what a pullback. But if you take this pullback now, you can see also market has broken out from the consolidation level because the longest candlestick here. Let me bring it to the zone here so that we can also look at it. The longest candlestick here, the market has gone. Sorry, market has gone below it. Let's go back to that place. I need to show you so that you understand what I mean here. Good. Yes, you can see this is the one that was holding the consolidation level from here to this point. You can hear that here all the way. Yeah, I think that market is still at the point to break out the consolidation level. Let's take example. Let me put it in line here. From this point, I believe you are following me. That's one. Another one is from this week here. That's where you put your line here. So, I want us to declare what we are doing here. Fine. Uh, so that you understand what I mean. Yeah. You can see this week here, you can see that it touch here, another black week here, and this is the last the bottom of this green line, and this is where this one touched. You can see now that the market is about to break out from the consolidation level from here to here. Market was trending also ranging what we call it for consolidation. But now to speak now, it has broken down the trend line. Consider this trend line that come down, market has broken it down, still coming down, and also market has finally broke the T line yesterday because it closed below the T line, and this morning it already opened below the T line. These are what I want to get us clear so that you won't be panicking when you are seeing the trend we're going to discuss after this trend line. Then looking at this where the market is going, you come and look at what your ADS. I told you earlier that when the market crossed here, you can see that that was where the blue line came up and continue the market remain above the T line and even above the trend line. That's why you must understand how to use your trend line, T line, and what your support and resistance level. They are very important. You can see that this indicator is telling us that market is getting weak now at this point after staying stationary here. That's like it's started looking now. Once this blue line and the red line meet this one come up again, consider the market is weak at a particular time, and that's about money flow. You can see that money flow have moved from almost around 70 down to what around 56, 58. You can see, but still above the T line. The possible that it can reverse next week after we start seeing a positive earnings again from the banking sector, depending on the figure and considering their price. I expect to see the smart money bouncing back to the market. Look at this pullback we're seeing and the yield that will come from this banking stock as we're looking at them. This pullback has improved their yield, and if even though they pay what they paid the previous year, that will yield also will be better for them to come back to the market, after the election. If they also grow their payout, that would be a plus. For me, there's no cause for alarm. But finally, because of what I had, before this class, let's look at, is it the right price to enter your cap? I think that would be the right, because people were calling me, are they jumping into your cap at this point now? Let's look at the chart together to see what was, if you are seeing what I'm seeing. There, if this is a daily chart of this is what they marked down yesterday. We saw the stock coming down, to even as low at this point, but try to rebound and see what is trading at this point. Now, it's been around, 6, 11 naira 65 to go as we speak now. Want to still have 5 to go, but we need to look at the 1 hour chart to see. But for me, I will not say you should buy the stock at this hour. But if you're a long-term investor, yes, you take your dividend first and see whether it will pull back. For we traders, want to confirm a breakout of the what of the T line before we can jump in. But for those that are long-term, very long-term, if you really want to accumulate more, go ahead and accumulate. But for we traders, because we are in to make money, we don't want to tie our money down. If you take time for start continue to go down again, but want to see that the support level becomes stable at the website, they can have go. But now we're still watching to see what the stock will be. But see the price there as to see where it is now at the right. Let's wait and see. Once we confirm a strong reversal, we can now say jump in. But see that the blue line is down and the red one, can see it what happened here when it is down below the C line. Finally, you can see that the red line is becoming stronger. As well, you can see the open here. For me, let's look at it. And money flow is below what? 50 to be around the 12. Let's keep our finger crossed for what? For UCAP now. Yes, there's potential that UCAP will ban, but let's keep our finger crossed as we speak. It's very, very important to do that. So that you can take advantage of what? For buying low for those that are traders in the house. But for one position we're already in, our advice, if you are a trader, you have met your what? Your profit target. If not, the pullback should not panic to sell, should send you to sell in panic. No, don't allow the pullback. This pullback is necessary. That this contagious fear so earlier is reflecting all of them. But once it reverse up, you see also you will smile. Just decide patient and watch for where you have made profit. Nothing stop you to take your profit as we speak. On this note, I will say thank you for your time for today. Look forward to see you tomorrow where we can do more of story. Because of our time, I have to take time to explain a part of all the data and what the market is trying to reacting to at this time. That it will come and go because this is not fundamental issue. It's just contagious fear because most of the banks here are in order. Their capital adequacy are still in order. But for this one, I have issue. You can see that the Central Bank of Switzerland National Bank intervene in Credit Suisse. Why government that also intervene in what in Silicon Valley Bank? I believe that for our banks there's no cause for fear, and for investors, like I said, you don't look at only the result of your company, profit after tax alone and top line. Look at their cash flow. Yes, balance sheet is good. Profit and loss account is good, but you need to know that profit and loss account you are seeing is sustainable. That's why you need to look at what the cash flow that will support that profit line or the earnings of the company. I say bye. See you tomorrow. Enjoy the rest of your trading day.